Welcome to this video in which I interview Richard Harpham, CEO of Escape Hunt, soon to be XP Factory, and Richard answers private investor questions about their Boom Battle Bar acquisition. Richard describes this as the first step to becoming the UK's preeminent experiential leisure company. I agree with him. And after the video, by the way, right at the end, I give my share price targets based on site targets and EBITDA margins. Okay, let's get into it. The content of this video does not constitute investment advice. Do your own research. If you do invest in anything mentioned in this video without doing your own research and the share price goes down, you only have yourself to blame. However, if the share price goes up and you want to give me some credit, I'm happy with that. And joining me on the podcast and on video, it is Richard Harpham, CEO of Escape Hunt. Of course, ESC is a ticket. It's changing very soon, though, hopefully. Richard, thanks for joining me.
Morning, Justin. Great to see you.
Yeah, and I'm assuming the name XP Factory will be changed after the general meeting. Is that the case?
It will, yeah. So we can't change that until the meeting on the 22nd. Yeah. So then post that point, we then roll into XP Factory.
And then do you know the ticker? The ticker what would be?
XPF.
XPF, cool. Okay. So I got some questions here from private investors. And first one is, why did you decide to acquire Boom Battle Bar? The big one.
That is the big question, I guess. So I think we've said publicly a number of times before that we felt there would be a point in Escape Hunt's journey where the time was right to really start to broaden out and indeed to bolster that group. And we would want to do that because ultimately we want to be the preeminent experiential leisure player, at least in the UK, and hopefully our aspiration takes us further afield at a point. And in order to do that, you have to expect to broaden out. You know what? So for a while we've been looking at businesses that share a very common customer. So that 25 to 35-year-old customer does a lot of stuff as well as escape rooms. So we've been looking at a lot of businesses which have that commonality of customer. We've then been looking at businesses that really sit well alongside what we do today. So where hospitality is key, where experience is key, where that depth of experience is essential. And so naturally, we started to look a lot at competitive socializing. You know, this is a relatively new space, but nonetheless, there are some good operators who have already set a bit of a path. So as we look to really understand customer dynamics, we were watching these businesses. We could really see how that customer looked like ours. We could really see how we would be able to operate them. And we had the benefit, I suppose, of taking our time and looking at what we saw as perhaps some of the limitations of some of the other businesses that were around. So when we came across Boom, it was, you know, that eureka moment in many respects. One, it was a business doing absolutely what we thought we could operate fabulously with our customer base. So having this range of games, rather than being doubled down on whatever, darts, bowling, you know, it doesn't really matter. This was a range of activities that brought people together to create experiences, create memories together. And this is great because it had immediate parallels with Escape Hunt. In Escape Hunt, we talk about our modular content. We talk about being able to move our content around sites so that we can create fresh experiences for customers, etc. Well, in Boom, it was the same. This modular approach to competitive socializing was relatively unique. It had a library already of 20-odd games, all of which could be brought in and moved out to create very relevant experiences for customers. And so that was a big tick for us. Then we were able to see that customers were having a great time. So most importantly, in our world, this is about experience. This is about people coming together and spending their money to make memories. Well, we could see that very visibly in Boom, and that's great. It's what we did already at Escape Hunt. We could absolutely see the parallels. And as I mentioned before, we could see that the customer is really in common. So fundamentally, we love the business. And we like the fact also that it was young. That's attractive because it's important to us that we can grow a business in our own vision as well. You know, it's a lot harder to take something that's really many, many years established. Wonderful if you want to leave it exactly as it is and just trade it into perpetuity. But if you want to create something in your vision that really has powers, you really want to get a young business that isn't too deeply entrenched in ways of operating and so on and so forth. So Boom already was ticking a load of boxes for us. And then when you kind of step up a level and you think about the macro environment, it kind of all fell into place because, you know, we've talked about the market for experiential leisure already. We know that's a hot space. We know the consumer narrative has been seeing a shift away from material purchase towards memory making, as I refer to it. Mm-hmm. And we know that we're absolutely in the heart of that business. We know also that it's a really fragmented industry. So whilst mainstream leisure is fairly well consolidated, be it bowling, be it cinemas, whatever you like, experiential leisure is really made up a lot of independents in the main. A few chains of a small size, but nothing really anchoring the sector. So our opportunity, as we see it, is to own that space and to really go after it. So the macros then started to make sense. And when you sit that alongside the property opportunity, which is extraordinary and very much here and now, both playing on the fact that retail on the high street has been declining for a while, plus COVID has put additional stress on landlords and operators, there is an extraordinarily timely opportunity to get a very significant footprint in the UK on very attractive terms. So this is to take crown jewel sites, sites that haven't been available for 10, 15 years on the high street, but take them at really accessible rents with significant capital contributions and really use this unique point in time to grow a business very quickly. And I suppose the third, sort of rationale alongside those two is simply one of leverage. So as we said, unsurprisingly, in a business where the core customer is very, very similar, you would obviously imagine us to be able to get a lot of operating leverage across those businesses. So that's, in terms of co-location, there are significant benefits to us, through property, through operations, and that is team, through marketing reach, all those different benefits which come together excited us. And so ultimately, it just felt like the right business to go for.
Yeah, it's funny. I think some of the shareholders, you've just got a very strong brand as Escape Hunt, because some people say, why are they changing the name? I like Escape Hunt, and they couldn't get their heads around this, and then they sort of buy into it now. They sort of, wow, the pipeline's massive. Like I said, the capital contributions from landlords, 13 million pretty much all told, and you've got more leverage on those bigger sites and more optionality. It just makes a lot of sense. And like you say, the modular games thing,
Exactly right. And just touching on that point specifically, Escape Hunt is still very much Escape Hunt. It will always be Escape Hunt. That is the consumer brand. It's the brand that we've put our love, sweat and tears into. And it's the brand that we're going to continue to grow in exactly the same way as Boom Battle Bars is the competitive socializing brand. That is the consumer facing brand. XP Factory is an umbrella in the same way as Merlin umbrellas, Two Swords and, all the obvious attractions that it has.
Yeah, exactly. So the deal, total consideration, 17.38 million to be satisfied by initial payment of 9.88 in cash and an earn-out. Someone said, can you explain the valuation, please?
Sure. So I guess the valuation at its heart sees us, subject to delivering the site numbers and targets that we expect to next year, sees us acquiring a business on well under a 5x multiple to EBITDA. So that feels like a very strong place to start. But if you get into some of the specifics, in round numbers, we've paid 10 million of cash up front. Well, if you think about what we have today for that 10 million pounds, what we have for that 10 million pounds are a number of sites already open. So we have Lakeside as an owner-operated site, which is already open and trading. We've talked about that a little bit already, but in terms of its performance, we're already seeing sales in excess of £40,000 a week. That'll generate EBITDA in excess of 400,000. So that's a great start. We then have O2, very soon to be opened, again, owner-operated, and that's not been built on our pounds. That was obviously built on the previous owner's capital. And so O2 again will open this side of Christmas. You'd expect very strong economics for a site like that. And there are a number of franchisees already open. So there are 5 franchisees trading today. There'll be another one opening in a couple of days' time, and then likely another further franchisee before Christmas. So all those things together are generating around £2 million of EBITDA as it stands. So that 2 million set against the 10 million of capital before we've even really kind of embarked upon our rollout seems to be very attractive to me. And when you combine that further with the fact that the pipeline which we expect to roll into, and by way of reminder, that is around 20 sites in an advanced pipeline, 10 already signed, 2 already in build, capital contributions, as you've said, of around £8 million set against that advanced pipeline, 13 million set against the pipeline of additional sites, which are all in heads of terms that sit beyond it. We feel that that's a very, very, very strong place to be. And so, and as I say, the earn-out part of the deal sees us needing to deliver the number of units that we've talked about already. So that will be 20 franchise sites by the end of next year, 7 owner-operated units, and in round numbers, around just shy of £11 million of revenue from that part of the business. And subject to doing that, these earn-out shares essentially vest, for want of a better word. And again, at the point when that has occurred, we're looking at an acquisition that's well under 5 times EBITDA, with a lot of runway to go.
Cool. You sort of covered a little bit of this. So quickly, the next two questions are: how many sites are there currently, and what are the targets? And when are the next sites to be opened?
Sure. So as I say, Lakeside owner-operator site already open. Really excitingly opened actually for a co-location. So we've got Escape Hunt in there and Boom. But that's the owner-operator site open today. 5 franchise sites currently trading. As I say, the 6th one opens in literally 3 or 4 days' time. And then the O2, which is a 17,000 square foot site, amazing unit in the heart of the O2, will open owner-operated before Christmas.
Yeah, I suppose, the economics of, these co-located sites help the economics of Escape Hunt as well, don't they, I suppose?
Well, they really do. And I mean, you make a good point, because when I talk about an acquisition that values the business at well under 5 times EBITDA, what I'm not including in that is any of the benefit that we expect to see through co-location of sites. And if we get into some specifics, Lakeside would be a good example. I just talked about why Lakeside as a standalone Boom is a really attractive business. It's any business that, in round numbers, is expecting to generate £400,000 of EBITDA with net capital of 400 in it. And by net capital, I mean build cost less capital contributions. So any business that's throwing out 1 year paybacks is a really great business to be in. So in and of itself, the Boom site is really attractive. But when you pile an Escape Hunt in as well, then it almost becomes transformational, because we have no marginal property costs. So for us going in as Escape Hunt into that Lakeside unit, you know where our core box economics sits. So typically we talk about £500,000 to £750,000 of sales per annum. We talk about at the lower end of that, EBITDA is being generated between £150,000 and £200,000. So again, really attractive returns on their own. But when you put one of those boxes into a site that has no marginal property cost, well, it almost becomes transformational. So Escape Hunt in that instance, even at the lower end, generating £500,000 of sales, we'd expect that to be doing 300,000 of EBITDA, because really our only variable costs are labour. We don't have cost of goods, that's not part of our model, and now we've got no property costs. So in and of itself, that's really, really attractive. And you put those two things together for Lakeside as an example, and then obviously the others that we are looking to roll into, the economics become very, very exciting. And what that fails, I suppose, to pick up is some of the additional leverage points, whereby we can share a lot of common space. So we're sharing reception areas. Obviously the dull bits, the back of house, the toilets, etc., are all in common. We're not building them twice. Over time, we expect to be able to train up our games masters for both businesses. Clearly a games master who can run an escape room can host games in Boom, and similarly and vice versa. So you just start to create a lot more effective an operation just with scale. Then you think about the marketing opportunity. We've talked already a number of times about this being a very, very common customer at the core. Well, great, now we can co-market. We can cross-fertilize between these businesses. You can play a game in Escape Hunt and then come and have a beer in Boom, maybe play some shuffleboarding, and vice versa. So it just seems to make a lot of sense to us.
Yeah, so on a simplistic level, I say, if you look at Lakeside, explaining to some of the guys there, I said, well, if you imagine if you booked an escape room, for example, at Lakeside, and you go there half an hour early, what are you going to do? You can have a drink, you may have a game or something, or you may have a different meet, and it's all going through the top line there of XP Factory. So it makes a lot of sense. Some people here saying, are you worried it's an untested fledgling business, Boom Battle Bar?
Well, it's certainly a young business, but I wouldn't say it's untested. And as far as we've been watching it for a significant number of months. Yes, of course, we don't have years and years of trading history, but we do have good trading history from the sites that have been open, and those sites are trading absolutely in the mid-range of their targets. So we're really delighted with where trading is. But I suppose the most important point to recognise is that what this is definitely not is a brand new industry. So competitive socialising has been around for a number of years now, and we've been watching that very, very closely. So we know that at its heart, customers love coming together for these activities. We know, given our own experiences, I mean, certainly on my management team's experiences, etc., both with Escape Hunt and in previous lives, we know how to operate businesses like this. A lot of us have got a lot of F&B experience. One of my most senior guys founded a restaurant chain, grew that quite significantly, sold it. So we have a lot of experience running food and drink as well as games, which clearly we run very well for Escape Hunt. So we're not at all concerned about the fact this is a young business. In fact, we're incredibly excited that we get to take on a young business, which we can grow in our vision.
Yeah. I think it was Giraffe, wasn't it? You're saying that
Correct.
people don't know very well. Yeah. So another one here is, how do you? I thought it was quite impressive. Obviously, that pipeline straight. I was expecting. I mean, I knew several shareholders were expecting maybe a few sites to be announced, maybe 5 from Escape Hunt, and then this came out with 21 after 39 total sites. But someone did say upon it, said, "How do you intend to open so many sites so quickly? Will quality suffer?"
I guess the most important thing to remember is that we've been thinking about this and planning this for a very long time. These deals don't happen overnight. We've been on this for almost a year. And through that period, we have been expecting completion, and therefore we have been expecting to operate. And therefore we've been making a lot of change and investment in the background to help us to get there and hit the ground running. So operations is the key facet to all of these businesses. These businesses have to be operated incredibly well, just as Escape Hunt does. Boom is no different. This is classic ops. So we already in the background have been gearing up on the operational side on Escape Hunt. We've got a wonderful team there, very well trusted, and that's freeing up capacity to be able to move some of our key people across. Clearly, we're bringing in some fabulous team members from Boom as well. And again, it's all been part of that plan to have that infrastructure in place. The pertinent point I would also make is that we're not doing all of these sites owner-operated, as you know. We'll have 7 owner-operated sites, and then the delta will be in franchise. And so whilst we will still treat those sites exactly the same, we will still run our area manager structure over them, our ops, our training, our people process will be exactly in common, whether it's franchised or it's not. What we don't have to do is oversee to quite the same extent the builds for these sites, insofar as, the franchisees manage that process for their builds. We get behind and we support site acquisition. We have our own contractors that are building the game, so there's complete consistency and commonality. That's all in place. These supply agreements have been in place for a very long while. But the day-to-day management of the site builds, which are very time-consuming, sit with the franchisees for a number of these sites, and that is what allows us to be able to go out at quite a significant pace. We'll be all over the operation. We have the supply chain all in common, so there's absolute consistency across brands, but we don't have to get into the nth degree of detail for every build. That is the franchisee's responsibility.
Yeah. We know about Lakeside. Which sites or other sites are you likely to be co-locating at?
So the ones that we've gone out so far and announced are the Oxford Street site. So that's incredibly exciting for us.
I've seen pictures there. It looks amazing.
Oh, it's
huge.
It's a game changer. It's an absolute game changer site. It's smack bang between Tottenham Court Road and Oxford Circus. It's got this wonderful 8-metre high frontage. It's the first thing you see when you come out of the Elizabeth line station at the point when that opens. So it's a really, really wonderful unit, flagship for us. 1,000 square foot on the ground floor, 15,000 square foot basement beneath. Really great unit. So we'll be co-locating Escape Hunt and Boom in that space. Edinburgh, we're going to be co-locating Escape Hunt and Boom, and then Exeter is the next one. So those plus Lakeside are the first 4, and then you'll expect to hear more from us on that as we get further into our journey.
Cool. And as far as sites opening, you said O2 is open this side of Christmas, is it?
Correct.
Cool. And there's certain sites referred to, I've seen mentioned super sites like the O2, Oxford Street. I mean, is Lakeside one as well? Are these ones you expect to have superior economics in some way?
So Lakeside is definitely a fantastic site, but with the best one in the world, we expect Oxford Street and O2 to be even more significant. They are right in the heart of it. Oxford Street, you're right in the thick of it there. That's an amazing unit. O2, bolstered by a huge number of events, as you can imagine. In and of itself, the O2 is a great, shopping destination, so on. But bolstered in the evenings with all the events that are now thankfully back up and starting to run, we expect that site to be fabulous.
Yeah,
It's
yeah.
a big unit as well. It's almost 18,000 square foot.
Yeah, wow, cool. Is expanding, in fact, someone worried here, so where will your focus be? But I suppose you say your focus is on both, So someone said, are you going to prefer Boom Battle Bar or Escape Hunt? And I suppose that's not neither, I suppose.
No, I mean, no part of this sort of deal with Boom is at the expense of Escape Hunt. It's actually far more because we see all these opportunities to grow them both together. I've gone out on record a number of times and talked to, the UK, in my mind, being worth at least 50 escape hunts. I absolutely stand by that. And I think what you would expect to see is we're more likely to be able to accelerate into that trajectory now that we've got this additional string to our bow.
Yeah, yeah. Is expanding Escape Hunt via franchises in the US still a plan?
Very much still a plan. Very, very, very much still a plan. You're aware that we were slowed down really quite significantly. That was our sort of biggest COVID negative, if you like, in many respects, that we just couldn't get people into the US, physically couldn't get people into the US to finish out the Supercenter build in Houston. Thankfully, we're now through that. That build's all but complete. And now, we start back off on that path. So it's absolutely our plan, no change there.
Yeah, in fact, I thought of you guys when the US finally opened up its borders to the UK recently. I thought, they can actually go back and forth. But so how does that work? So the Supercenter will open up, and then what? You invite sort of potential franchisees along. How does that work?
Yeah, so the way it works is, I suppose it's quite straightforward. You want to have, as we refer to them, a Supercenter. So you want to have a site which is very much the best of Escape Hunt. So that is our best games, our most recent games, the best of our tech, the best of our team, and just to really showcase what we do. And so that's a really well-trodden path for franchisees to take. You expect to start with a super site, and then you use that as the destination that woos successive franchisees.
Cool.
So from here, we would now expect to get back into discovery days where franchisees have spent time with the team in the US already. They start to meet us over here, and then we start to work out what their own expansion and rollout plans could look like.
Yeah, yeah. And talking about the US or outside the UK, someone said, are there plans to roll out Boom Battle Bar outside the UK, even though you're going to be very busy in the UK for a while, I suppose?
I think the busyness is the key point there. I mean, look, it goes without saying, obviously, we think the opportunity for Boom is massive internationally, and the US is such a clear and obvious market for it to roll into at a point. But in the very here and now, we have a lot of sites to execute against brilliantly. We have to do that. That will be our focus. So whilst Escape Hunt will very much be looking to grow its presence in the US and Boom at a point, this coming 12, 18 months is very much about execution in the UK for Boom, just so that we retain our focus.
Someone said, are there any plans of bringing Escape Hunt and Boom Battle Bar to Cambridge? Or does someone live in Cambridge there?
Absolutely, there are. Cambridge is the huge thought of infuriation to me. We so desperately want to be in Cambridge. We've desperately wanted to be in Cambridge with Escape Hunt for the last goodness knows how long. We think we'd trade fabulously, and we have never found the right site. Any landlords out there listening to this, if you've got a great unit in Cambridge, we'd take 15,000 square foot. Love to hear from you.
Wow, cool, yeah. And last one, what's the ultimate ambition for the group?
I think I probably touched on this right at the start, but fundamentally, we want to own experiential leisure. The start point to that is to become the preeminent experiential leisure business in the UK and see where we can take it. But it's a big aspiration. We're going to go for it. Boom is very much representing the first step towards our journey.
Excellent stuff, Rich. Good to chat to you, and hopefully we catch up in the not too distant future, because I think we're going to be very busy with news flow.
Certainly hope so. Cheers, Justin. Appreciate it.
My forecast for Escape Hunt's acquisition of Boom Battle Bar together. This is, I believe, the fastest growing, most exciting experiential leisure business in the UK, and soon to be further afield. But these forecasts are based on target site openings, which is this basically 21 owner operated by Escape Hunt, end of 2020. These end of year figures, okay? And Boom Battle Bar, 7 UK owner operated, 20 franchisees, okay? And further on, 5 years plus, 50 sites by Escape Hunt and plus franchisees, and 100 with Boom Battle Bars. Now the franchise breakdown is looks like this: 1 of 5 are going to be franchised for Escape Hunt, 4/5 are going to be owner operated, and the other way around for Boom Battle Bar, 2/3 will be franchised, 1/3 will be owner operated. Okay, here we go. Based on these targets, EBITDA margins. These are the margins. Owner-operated sites, about 30%. Franchisees, 75%. With Boom Battle Bar, it's 21.9%, 85% franchisees, okay? Here's my workings. It's a big spreadsheet, lots of boring figures here. As you can see, here's the years. There's the site revenue. These will get better. These are very conservative targets because these will get better, especially with co-located sites and super sites like Oxford Circus there and Oxford Street, I should say, and also O2 places like that. They're co-located, so the costs are better, of course, and the margins are better. But I'm still using just an average here, 600,000 per site. So these are all conservative, and these are the sort of group revenue for Escape Hunt. This is Boom Battle Bar, of course. Sites go up here. This is owner operated. If you see OO, it's owner operated. These are franchisee sites. Okay, go along here. They aim to get 100 long term. So first of all, this is on the current pipeline, and so this is largely low risk because we got this is end of year now for 2023. I'm talking about 26 owner operated sites for Escape Hunt, franchisees 40. 12 owner-operated for Boom Battle Bar, 28 franchisees there, okay? This is the current pipeline up to 2023, and I'm going to use an EBITDA of 15. So you get a target there of 145. That's 309% upside. Of course, there it is, 15 times EBITDA. 309% upside. Why am I using 15 here times 15? I think it could be more than that. When you generate, you are the fastest growing, most exciting company that's profitable, it could be a 20 EBITDA, but I'm going with 15 because it's based on they're profitable, they're fast growing, they're market leaders in a new, exciting experiential leisure sector with earnings visibility, because this is based on sites already signed in the pipeline, but 39 sites there. So that's based on that, okay? Now, these are mid-term targets. So what I'm saying is now, I reckon we should be in the next year or so way over £1, and towards 2023, 145 at least. And obviously, the market looks ahead. So I think once the earnings start coming in, it'll gravitate towards 145 next year or so. We're now at 35 pence. Okay, mid-term targets. This is future pipeline, not yet signed, but it's within their targets. They're going to aim for these targets. I think they'll get them because, let's be honest, there's plenty of sites out there. There's plenty of commercial operations and commercial landlords who are looking for tenants. And so I'm going up here at 10 times EBITDA, basically because these sites are not signed yet. So I'm just on 10 times EBITDA. So this is the most conservative. It could take up to 20 or 15, but I'm basing it off times 10 EBITDA. So what you get is £2.20. So it's 10, not 15 there. And that's a 519 upside. So, of course, we're on 35.5 pence right now. And that is the mid-term target, £2.20. So as you can see, plenty of upside. And still on the 145 target, lots of visibility. The sites are already signed. Hope that makes sense.